Africa possesses the world's largest renewable energy potential, but currently attracts less than 2% of global renewable energy investments, with nearly half of Africa's 1.2 billion people still lacking electricity. Executive Director at the Global Association for the Off-Grid Solar Energy Industry, Sarah Malm, joins us to explore how the continent can bridge this gap. Sarah, thanks so much for your time today. So, a huge disparity there that I mentioned at the top, as the continent only attracts 2% of investments. Talk to me about the disconnect here and whether the continent can position itself differently to attract further funds.
Let's put things into context. One is, across Africa, we spend about $1 trillion in subsidizing fossil fuels. When we could solve the energy access problem, which is basic energy access, requires an investment of about $21 billion in the next 5 years. So that's for basic energy access. There's a huge disparity between the urgency to get clean, renewable energy to people and what we are spending on subsidizing fossil fuels.
So that, 2030 target really approaching, and we really do need the funds to turn things around. We recently had COP29 in Baku. Delegates from nearly 200 countries agreed to triple annual climate finance for developing countries to 300 billion by 2035. This deal, Sarah, was met with a lot of pushback from developing nations. What's your reading on that?
The read is the countries that are contributing the most to climate change are not picking up the financial investment that countries that have lower emissions really need to catch up and establish a clean energy future. And let's take a look again. I'm going to push off-grid a bit, but looking at renewable resources, we also need to look at how we put together our energy plans to make sure that renewable energy is part of integrated energy planning across the nations, particularly in sub-Saharan Africa.
Let's get back to that investment conversation. Is the access to funds or access to investments the biggest challenge we're facing when it comes to, implementing these renewable energy strategies within the continent?
So if we look at risk, you've got real risk and perceived risk. So there's a lot of problems with getting access to finance in local currency, so local currency financing, and also to really get the commercial investors to have the willingness to what they see as higher risk, higher costs of capital. So costs of capital across Africa are much higher than in other markets. So there's a lot of financial reasons, and then there is also policies which help open up and increase investor confidence in coming into markets. So regulatory frameworks and policy frameworks. But a big part is getting de-risking instruments into the mix. So what lowers the cost of capital, what creates a first loss layer to then attract commercial investors to come in and take a serious look, whether it's large power generation projects or off-grid projects.
And you touched on it a bit there, that regulatory environment, Sarah. Is the regulatory environment supportive of these initiatives that are taking place?
It really varies from country to country. So there are countries like in Zambia that have made moves to deregulate to attract more investment in the mini-grid space, for example. But one of the big constraints is VAT, and that VAT policies around the sale of solar products are uneven and unevenly enforced around various countries. And second to that is import tariffs. So what it costs to bring these products, particularly solar products, into a market. The tariffs are high, and these costs get passed on to consumers.
Sarah, thanks so much for your time and those insights. That was Sarah Malm, Executive Director at the Global Association for the Off-Grid Solar Energy Industry.